Fellow traders, 'tis I, the Rumpled One, coming to you Thursday, March the 20th. The year's 2025. Let's talk trading. Going for broke with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And always have your risk management in place. Never lose more than you're willing to lose on any one single trade. Yesterday or the day before, I mentioned something about maybe if you had $1,000 account, or you have $1,000 to trade, you only put 100 in the account, and then that way, if you blow it, and you've still got 9 bullets left. And so a trader wanted us to expand on that. So that's why I'm saying going for broke. So, um, what I'm thinking is, if let's say you have a $100 account and you've got one of those brokers that'll give you a 1,000 to 1 margin or something. So maybe with $100 you could literally trade 5 mini lots or a full lot. So if you just go in to double the account um, at $5, you only need 20 pips. Of course, there might be a commission and or spread, but you just basically need 20 pips, and then you've doubled. You've gone from 100 to 200. So my thoughts on it would be, if you so let's say you got lucky the first time and you doubled it. Now you go to another account and you start. So in other words, you don't risk the 200. You only risk 100, but you go to a separate account or withdraw 100. And so you just keep doing that. And unless you're just a really bad trader or you have a really crappy method or you're just really unlucky, it seems like you should be able to continue trading for a while. But it's not something that we're recommending. It's just a trader asked us to expand on it. What do you think, Walmal?
Yeah, it's a lot of times I think what happens is that you know it, it can go and act for you, or not act, but bad with word choice, but it can go and actually put a barrier up for you, a good barrier, not a bad barrier. Sometimes we look at barriers and we automatically have a bad connotation to it, but a barrier that goes and keeps you where you belong. Because if I screw up, I'm only going to screw up the one bullet, as you go and call it. I'm only messing up just one little part, and I don't have the ability to go further than that. So what I mean by that is, you got your example of $1,000 account. Okay, you have $1,000 that you can go and do. Well, the worst that you can do is lose $100. No matter what you do, you can't lose more than $100 because you only have $100 in the account. Whereas, like I had said yesterday, we have it's a lot of traders have this tendency, and I did it. I blew an account or two doing this because that's I think we all, as new traders, we all experience this and we all do it. Where it's like, I know it's going to come back. It always comes back. And, and guess what? Sometimes it really doesn't. Or if it does come back, it comes back a month from now. And that's the problem. And we stick with it. We stick with it. And we stick with it until there's nothing to stick anymore.
Yeah,
instead of instead of losing the $100 you're willing to lose on any particular trade, you now lost $1,000 on that particular trade.
yeah.
So I kind of like that idea for that reason.
Well, the thing is, it's a real hard stop loss because the broker's going to take you out.
Exactly. The broker's not going to lose money just because they think you're a nice guy. It ain't going to happen. I promise you, it ain't going to happen. And it's so funny because they put a lot of these brokers put up on their websites propaganda or whatever to go and get you to buy into their particular platform. You know, we will make sure that you do not go and wind up losing more than you had in your account. You'll never have to go and write us a check. They put that up there as like a big plus. Hey guys, they ain't doing that for you. They're doing it for themselves because a lot of these brokers are overseas. A lot of these brokers are in far off places, And if you went and took $100 account or $1,000 account and blew it to the point where you now were down $10,000, okay, good luck on them to go and try to get the $10,000 out of you. Will they go maybe get a court order or something? Yeah, they certainly will. But the thing is, it then costs them money for attorneys, courts, and everything else. And who knows if they'll ever get it back? Well, they have a much better way of doing it. Oh, you're down to $2.30 on your $1,000 account. Guess what? We're closing all your trades. And that's what they'll do, and you can't blame them. I mean, they don't want to lose money. They're not in the business to go and lose money, especially over something they have some control over. But it's funny that they'll go and list that as a bonus feature of their account. That they make it seem like they're the only broker in the world doing it. Every broker does it. But I do kind of like your idea there, sir, of just breaking your account up that way, because especially in the beginning when you're first learning, because it just gives you the ability to go. You mess up, you mess up. I talk to any successful trader. I've yet to meet a successful trader. And I'm doing this since for going on 20 years now. Okay, 15 years, something like that. I don't know. But I've talked to a lot of successful traders, a lot more unsuccessful traders. But of the successful traders, I've yet to speak to a single one who had not blown, at least two accounts. It's just it's I hate to say it, but it's part of the learning experience. Well, wouldn't it be better to blow $100 account than to blow $1,000 account? And then if you blow $1,000 account, you may not have any more money to go and put into it, to go and continue for tomorrow. So it it just gives the ability to be able to do it. Trade that $100 account and cut down your risk size, a little bit, and
I
trade it
think
that way.
Well, I think you're kind of morphing off into a
I am.
different topic, because see, the whole idea is it's like in the going for broke is it's just like, hey, you know what? I'm feeling lucky. Um, or I want to see if I can just really, ramp this account up. But on the other hand, see if you have $1,000 account, you go, okay, my stop loss is 100. But you've got more money, like you said. Oh, I think it's coming back, and the next thing you know, you're down
You know,
200. So
yeah,
this is like a super hard stop, but you basically get 10 tries. And what might
right,
happen is, maybe you blow the first three, four, or five, but in that process, maybe something clicks, you learn something. So then the next five, you double your accounts, and then you just keep going. And you say,
right,
this is, and you might even adopt this method um, as a discipline,
right.
because we're
Yeah, when
talking
you
about $1,000 account. You're not going to drive a Lambo, trading a micro lot.
right, it's just not happening. And I would go and say one thing. I wouldn't say adopt this method, but I would go and say maybe adopt this tactic within your mind. We've talked about tactics and strategies, a bunch of times here,
Right.
and and the reality is sometimes the difference between, you trading one particular way and me trading the exact same way, me being profitable and you not being profitable, or vice versa, is the reality is that there's some type of thing that's happening underneath the covers that you don't even recognize it's happening. It's sort of like I took a trade before, if you recall, Kira, where I said, I went and shorted here. I shorted here for obvious reasons, and if I recall correctly, your your statement back to me is, I don't see any obvious reason.
Oh yeah, yeah.
To me, which is plain obvious to me, and you were right, and I was right, because there wasn't a reason to take that trade based on the method. I took the trade because I had a very, very strong understanding. I'll put it that way, everyone likes to do when it gets to a particular level after it's been to another level. Basically, understanding how the price action works on the pound. So for me, it was sort of like, could I sit there and actually describe a methodology around that? Probably not. It's just, it's an observation thing that it's like, yeah, you just take the trade there. It's just, I can't explain it. I just know that you take the trade there. And I was already in another trade, and I was underwater on that first trade. But by getting into that second trade, I was able to get out with a nice hefty profit because my first trade finally did go and do what it was supposed to do. And my second trade, I got in at a much better price, but, and like I said, so, it, the thing that you pick up when you're going and getting this trading experience, you know, you're exactly right because the thing is, oh, look at that, look what that did. Let me put that in my little bag of tools here, and next time you go in, so tomorrow you go and trade a new $100 account. Oh, look at that! I got that opportunity again. Let me go and do that again. That worked so well yesterday. You go in there, it works, and the third day. So what can happen is exactly what you said. You can lose 3, 4, 5, even 6 times in a row. Okay, and let's say you lost 6 times in a row, you're down $600. Okay, but now let's say you win the next, 3 times in a row, and you double, each time. Well, guess what? Now you're up $300 on there minus the 600. So now you're only down $300, as opposed to letting it run and letting your losses run where you don't have anything left. And then and if you just continue doing that, what you'll find out is that the next $1,000 that you go and risk, and you split it up again. Well, this time, let's say you only lose because of your new bag of tricks that you have, you only lose 2 times in a row now. And now you're down, $200. Well, now you go and let's say you go and win 5 times in a row. Okay, so now guess what? You've made up the losses from the previous $1,000, and you've made up the losses for the week, and you're back to break even. And now you got 2 more days or 3 more days that you can trade. And you now have the ability to go into profit. Oh,
Yeah.
look at that! Now I'm sitting in profit, and so now you're now sitting there with $300 worth of profit. That's not bad.
Right. And then the trader said, "Can I ask for more clarification on the minimum RR for such trades?" So it's kind of like I'm not even thinking about RR, risk reward. I'm thinking about, okay, I say I want to have $1,000. I put $100 into account, so I'm willing to blow it. I'm willing to blow that $100. That's what risk means. So it's like, okay, do I want to go one lot for 10, or 5 mini lots for 20 pips to double that account? You know, it's one of those things where you push it to where you think you can exit with a profit, as opposed to thinking in terms of like the what do we call those guys? The market what is it? Walmal we call them. Not market
Not sure.
profile, but the imbalance trader, the order block guys, the market
Oh yeah,
uh
structured
yeah,
market.
market structure traders. Yeah, we're not, that has nothing to do with what we're talking about here. No, this is more, you can almost think about it going up to a roulette wheel and putting, you've got $1,000. Okay, I'm going to bet, $100 on the black, and you either win or you lose. And then it's like you lose. Okay, I'm going to bet $100 on the black again. And you say, if I can just get ahead a couple of times, then I'm going to walk away. Um, so that's what this is all about. And you know what? The fastest 15 minutes in trading is just about over. So, fellow traders, maybe you learned something, because this is kind of not our usual talk. But once again, it just shows it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.